This is Radio Now 95.3 FM.
The Debt Management Office DMO projects that Nigeria's public debt could exceed 150 trillion naira by the end of the first quarter of 2025. And back in September 30, 2024, the DMO recorded an increase that pushed the country's debt profile to 143 trillion naira. Analysts pointed to the depreciation of the naira against the dollar as one of the key factors affecting the debt profile. Joining the conversation this morning is Samuel Oyekomi, a researcher with Northern Berger. Mr. Oyekomi, good morning and thank you for joining us on the conversation.
Yeah, good morning. Thanks for having me.
Can you speak to us regarding this projected figure of Nigeria's debt profile by the end of the first quarter?
Yeah, I think it's a no-brainer. Right now, debt profile is excess of 140 trillion naira, and it looks likely to continue in that trajectory. Just merely considering that our budget deficit for 2025 budget, right, is estimated around 13 trillion naira. And then just looking at the calendar of the DMO and then the CBN in terms of maturities this first quarter, and how much the DMO is seeking to raise in terms of bond instruments and whatnot, then Treasury bills, CB's maturities in Q1 2025, that gives you an indication of how much borrowing you might be seeing at this point. And then when you do that estimation, we could find ourselves towards the 147, 148, even 145, even 150 trillion by the end of March 2025.
In the naira terms, right, it's clear that if we look at our foreign debt, because it's in dollar terms, expectations are that naira-wise, if our currency increases in value, gets stronger between now and, let's project, say, the next 6 months, so the next 2 quarters or so, we will see some sort of differentiation in our total public debt. What likelihood do you see as that happening? Because there's already projections that we might hit up to 1,300 naira to a dollar sometime this year.
Yeah, so 1,300 to a dollar is the best case scenario. I think it is always best that we look at it from a base case. And base case, based on what we've seen in the last 2 to 3 months, the exchange rate has been within the range of 1,500 to 1,550. To me, it speaks to if we were going to be anchoring that exchange rate somewhere, I think we should just leave it at 1.5. But then again, it also speaks back to the numbers. Look at debt profile in terms of dollars. It does not necessarily increase in recent times, and that is also as a result of exchange rate in terms of when you look at the naira debt profile. So domestic debt profile is around 73 trillion. By the time you're converting back to dollar, you have it around 45.86 billion dollars, and that gives you an indication of what's happening. So, of course, if you have exchange rate strengthening, which I don't see so much upside, best case 1,004, 1,005, and even if it gets to 1,003, that's also very possible. But again, you need a lot of things to happen. Capital inflows have to come in. There needs to be adequate supply of FX in the market, and there needs to also find a way to the CBN has also liberalized the exchange rate. But again, the parallel market is still trading at a premium compared to the official market. We need to tighten those lows. And I think if we can do that, yes, we could get to that point of 1,003, 1,004. And that's also going to have some positive impact on our dollar side debt profile.
Considering that public debt is a combination of essentially debt from the federal government, the 36 states, the FCT, I'm wondering what part we should be paying closer attention to. Should we pay closer attention to what the states are borrowing, or is it really the federal government's borrowing that's of greater concern?
Yeah, I think it's both ways. Oftentimes in Nigeria, we don't pay so much attention to state government and other municipal and other local government and all that. And I think it's quite important that we do that. But again, if you look at it in the grand scheme, the percentage total of debt profile in terms of state contribution now is just around 3% of the total. So it doesn't really catch the attention of most analysts. But then when you drill down into the numbers, you realize some of these states are increasing their debt stock are incredibly fast. Then you compare that to their IGR, they're not able to generate as much revenue internally. A lot of them also depend on FAC allocations. And then when you start looking at these numbers and finding the relationship between them, realize that the states also need to actually have a microscopic view of what is happening in various states, so as to ensure that there's also sustainability in terms of revenue generation and then borrowing.
Well, Mr. Oyekomi, thank you very much for your time and your expertise on this conversation. Samuel Oyekomi is a research associate with Norrin Berger, who joined us this morning to speak on the projection by the Debt Management Office that Nigeria's public debt could exceed 150 trillion naira by the end of the first quarter of 2025. You're still on to Radio Now 95.3 FM Lagos. The conversations continue in just a moment. Do stay with us.
This is Radio Now 95.3 FM.